Hi, everyone. Welcome to Analyze Your Trade, episode number 14 for December 5th, 2017. My name is David Kosmeter, and I'm the creator of TimingResearch.com. Tonight, we will be discussing your trade ideas. So over the last few days, over 50 people submitted up to 5 symbols each. And I have put together a list, which you should be seeing on your screen right now while I'm talking. We're going to go through as many of those as we can tonight. I have Dean Jenkins back to moderate tonight, so I'm going to go ahead and turn it over to him.
All right. Hey, thanks, David. It's good to be here again. I can't believe we've been doing this for over a quarter now, so episode number 14. And I always enjoy this format. And got a couple new folks that I haven't been here with before, so I look forward to getting to know Todd and Jody and hearing their inputs on the stocks. And I really like the list of symbols we got tonight. They're a really diverse set of symbols, and who knows, might get some good trade ideas out of this. So let's go ahead and kick it off by having each of the panelists just give a 1 or 2 minute introduction, real brief introduction of yourself and kind of what your approach to the markets is, what you got going on. And we will start with you, Todd.
Hello, everybody. You can hear me fine then, Dean?
Yeah, you're good.
Okay, good. Okay, my name's Todd Mitchell. TradingConceptsinc.com. I've been trading now since 1988, since graduating from college. And I started my educational firm in 1994. And so I've been going strong. Everything's great. And just check out my website. Again, I trade every day. I day trade futures. I trade stocks, options. I pretty much do it all. If you can chart it, you can trade it. So that's about it.
I like that. If you can chart it, I can trade it. Outstanding. Right. If it's got a open, high, low, and close, I can analyze it, right?
Exactly. Chart.
All right. Hey, Jim, we've been on lots of times before. It's good to be here with you again. But go ahead and introduce yourself.
Sure. I'm Jim Kenney. I provide the content for over at the optionprofessor.com, and basically it's an education firm going over all the ins and outs of all the different option strategies for income, cash flow, and hedging and limited risk speculation and all the different tactics that are available. So there is a lot of moving parts, as they say, and Option Professor tries to give you a hand figuring it all out.
All right. Outstanding. And Jody, we haven't been here on the show together. It's good to meet you. And if you take just a second, introduce yourself to the folks listening. It'd be awesome.
Thanks. Nice to meet you too. I'm Jody Samuels. I've been trading since 1980 when I started working for JP Morgan as a currency trader. And right now, the markets with all the cryptocurrencies, it's just a little bit of deja vu for me, because when I started trading in the 80s, the markets were absolutely wild, roller coaster-ish, and with wide spreads, huge spreads, and it's just reminding me of that time. So I've had a lot of deja vu yesterday, but lately. But I have an education company called fxtradersedge.com, where we train people how to trade the markets, any markets, stocks, currencies, commodities, using our Elliott Wave systems that we've developed. So that's our niche, looking at the market cycles and based on the market cycles, determining where to enter and exit our trades.
Outstanding. Well, another Elliottician then, because that's what I do. So I'm Dean Jenkins of followmetrades.com. I've been trading since about 1993 when I was working for Intel Corporation. My first introduction to trading was when the company started giving us employee stock purchase, employee stock options, and it went up and doubled and split every 2 years like clockwork. And I thought, man, I'm a really good trader. And then started trading the .com thing and learned that there's a little bit more to it than just riding along with a great company. But I've been doing my current method, technical trading. I started off fundamental trading, found that to be a very frustrating exercise, and then became a technical trader several years ago and have been getting consistent returns. So I have a stock advisory service. I offer stock picks that people can follow along with. I provide some education, and I have a stock trading room, live trading room in the mornings. Not day trading, but we're trading longer time frames and then updating them every day for about an hour and a half in the mornings. And I just love trading, talking to traders, helping people reach their financial goals. All right. So we got a great list of symbols. I'm pretty excited to hear, to look at them, to offer my opinion. I've peeked ahead a little bit, and also to hear what the other folks on the panel bring in a diverse set of opinions. So the first symbol we got going on here is SQ, square. Pretty hot company. And we're going to lead off. We're just going to keep that same order through the evening. So Todd, do you want to share a chart or just talk to it? What do you think about square?
Let's see. I'm trying to share my screen. Let's see here. Here we go. All right. You can see my screen fine?
Here you go. Yeah, got it.
There we go. All right. Yeah, definitely strong uptrend. We've pulled back right now. We're right at the 50% retracement from this low to this high. And today we created an inside pattern. I'm a big price action trader. So I wait for certain patterns to occur. And one pattern that most people are aware of is the inside bar, right? So today's high was lower than yesterday's high, and today's low was higher than yesterday's low. Market's starting to settle down a little bit here in volatility. So what I would be looking to do tomorrow, I'd be looking to buy that break up through the high of 38.59 to a minimum of 38, what did I just say? 38.59 to 69 roughly, about a 10-cent penetration. I think that'd be a pretty good setup actually, with the stop below the low of the day, looking to make it a minimum of 2 times what the risk on this trade is. So that's what I would be looking at. Plus, one indicator I love looking at is the 2-bar RSI. When we're below 10 and we get a close below 10, I'd like to see those situations occur, and that helps give me a trade setup, right? So if we're in support, a good support level and an established trend, and we see that 2-bar RSI closing below 10, that'd be a good setup. And so that's what I see here on Square SQ.
All right, so you're long, kind of a short-term trade. It sounds like long on SQ, huh?
Would be long if tomorrow can break up through today's high. Correct.
Okay, very good. Jim, what do you think about Square?
Is this for me, Jim?
Yep.
Oh, okay. I didn't hear you. Right now, it's come down to that 50-day moving average. I like to look at the moving averages to get some kind of idea of price and time. And that 35, 36 area is pretty much where that 50-day comes in. And today went down to 36.74, not too far from it. And it did bounce off a buck. And I was saying, if we can take out yesterday's high, you could get a little bit of a reversal, and the line in the sand would be around 35, 36. Short interest is 13.21% of the stock, so there's plenty of people to cover if they wanted to. And the fact that it went from 50 down to where it is probably just a product of being overbought and maybe some of the tax law changes not being so favorable for them.
All right. And Jody, what do you think? Where are you at on Square?
Can you see my charts? Do I have too many up here? You can see what I'm looking at?
Yep, 6 charts. There you go.
Yeah, okay. Because I do a top-down approach. So I go from the weekly down. I should probably put up 4. But anyway, looking at the weekly, yeah, we're definitely in a correction. Looking at the daily, we're down at some good support levels. I wouldn't chase this yet. On the 4-hour, we could come down a little bit lower. So I would rather see a move back up over 40 to clear some of these. Well, this is some moving averages. So I would rather buy on a break of 40 rather than buy it at this level, because I'm not convinced that we can't see slightly lower levels. And I like to look for a confirmed buy. That's when I look at the lower time frames. So we would have a confirmed buy if we break above 40 on the daily chart. A confirmed buy on the smaller time frames. But right now, the smaller time frames are in corrective downtrends.
Okay. And I'm looking at Square. I think I'm sharing my chart here. And what I see is, we had, of course, this big, impressive run up. And we've had a correction. And to me, this looks like we had an Elliott wave 3. We're in 4 now. So I'm putting my Fibonacci retracement tool up. And it's even been a shallow retracement. You can see the indicators I've got on the chart here. I got the Ichimoku cloud, the 200 SMA, and a momentum indicator at the bottom here. So we could continue down. It looks like it's probably going to find some support here at the Ichimoku cloud, be a bit of a shallow wave 4. I would like to see on the daily chart, have it find some support, put in a high, higher low, new high pattern, Dow theory confirming a trend change back up. And I'm not sure what price that would happen at, but that's more of a pattern I look for. Again, nice move down, want to see a pull up, pull down, not take out that low, and then go on to a new high. Little zigzag, high, kind of ABC, ABC. That would get me in long. And a wave 5 on this, if that's the bottom, that's not proven yet. If that's the bottom of 4, then a 5 could take us up pretty high. That's, that's not 1 or 2 days. That's a couple months. But price target, if that's the bottom, not proven, price target's up around $60 to $74. But a lot of things have to happen before I would be excited about a long on this just yet. But if it starts to happen, it could be very exciting. But that's where I'm at. All right, next up is USO, oil. Okay, what a radical, volatile, crazy market oil is here. Tough to trade. Oil is tough to trade. You gotta be on your game to make money at oil. Where are you at on it, Todd?
You see my screen?
Yep.
Actually, do you see my screen or no?
Right now we see you.
You see me. There we go. That's not good. There we go. You see it now?
Yep, there it is.
All right. Actually, I won't have a trade up right now. Yeah, there'd be no trade. We've had a huge run. I wouldn't be looking to initiate any trade up in here, actually. If we got the retest up in here at about 1177, possibly buy puts, possibly if we got a confirmation to the downside. But to trade it right in here, I wouldn't be doing anything right in here.
Okay. Don't like oil right now.
No.
Jim, what do you think about oil?
Well, this thing is at a good run up from 9 up towards 12 here. Seems like there's plenty of resistance from last year and earlier this year at around 12. Short interest is 32% of the stock, so they got plenty of people to buy back if they wanted to. But if oil itself isn't going to get much above 58 or 60, then you don't know if this thing will have the power to get through 12. So maybe a pullback towards 10.50 would make this a little bit more interesting if it held. Volume seems to be drying up. The last 50 days, average volume only 16 million shares versus 200-day volume of 24 million. So whatever this rally is, it hasn't exactly been on powerful legs.
Okay. So not a strong case for you for oil either.
No, I think there's resistance at 12 on this thing and resistance at 60 on oil, and those would be 2 reasons to stand aside.
All right. Straightforward. We don't need to belabor it. If it's not good, it's not good, right? Move on. All right, Jody, where are you at on crude oil?
Right. So for me, this is on the weekly chart. This is a major correction up. I still think it looks positive on the daily, on the hour, and on the 60-minute. It looks like we are in a nice sideways correction, which is a wave 4 on those time frames, which would then take us up possibly to the 14-15 level. But this is one big correction up. So if we move up to that level, I think it'll be a great sell. I wouldn't sell here, and if I were long, I would hang on. I'm not long. I would hang on looking for that profit target and look to buy puts at that level perhaps.
Okay. So nobody's really excited about oil yet. There's a lot of contingencies on if like that. So I'm showing my chart. I'm showing the daily chart here on the crude oil futures. If I'm going to trade USO, I'm going to take all my cues off of the crude oil futures on a daily chart. USO is just going to follow it. Crude oil trades almost around the clock. Moves are coming from. So my analysis starts here on the crude oil futures. And I'm bullish on it. I think it's going to go up and put in new highs, but it does have some significant resistance. I've drawn a horizontal line it's right here at 60-ish, right? We've raced up. Second half of the year had a nice, higher high, higher low, new high, pulling back. If it can go put in new highs and break 60, I think we're heading up. I think there's some new highs, from the last couple of years. But it's got to prove that. We got to work through this and take out those previous highs. It is well above the 200-day moving average. It's well above the Ichimoku cloud. We got nice positive momentum. We just got these storm clouds overhead here at these previous highs that we got to pay attention to. If it breaks those, I think all bets are off, man. It's heading up, but that's a big if, and we'll have to wait and see. I wouldn't go short now. I wouldn't go long. So I'm just waiting for confirmation on it. I think like everybody else, I don't think anybody said, "Yeah, I'm in oil now, man. There's a great trade there." Everybody's waiting and watching. Next up, the F in FANG is Facebook. So let's go ahead and shift over to that. See what Facebook's doing. Pretty interesting with Facebook. I feel bad for Mark Zuckerberg. He started off as a young guy, really wanted to create something cool that the young people, the hip people liked, and now it's mostly grandmas and grandpas like me sharing pictures of their cats. But his consolation is he's a billionaire, I guess. Anyway, we'll start back at the top. What do you think, Todd, about Facebook there?
Facebook, yes. Obviously, can you see my chart? I'm going to see it again. All right, good. Obviously, at least a short-term double right here we saw. Excuse me. We've come down to what I believe is support. So I drew in these two white horizontal lines representing this low right in here. We're definitely oversold on the 2-bar RSI, extremely oversold. I think tomorrow, if we get a little gap lower, we move lower and we test today's open, I'd be buying calls actually. I'd say January 19th, go about almost 45 days out. I'd probably do a couple strikes in the money, looking for a run up because I definitely think we're going higher on this. But my stop on this would, of course, be a close in the underlying, of course. If we got to close below this lower white line, 168, I'd say anything below 168 would be my stop on that. So I would definitely look to enter on an intraday basis if we could get down closer to the low or the open of today, right? Maybe even move down a little bit, get right in here. And that's how I would take this trade. That's how I would, that's actually, it would be a setup for tomorrow. So that's right.
So you're long on Facebook if it opens above the previous close. Is that what I heard?
If we regardless of where it opens, if it gaps lower, great. If it just trades lower, I would prefer to see a gap lower to anywhere between where it closed and where it opened. Maybe a little lower than that. Yes, I'd be looking to buy the call options with a and wait. My stop would be a close about 167.5. If we close below that, then I would exit on the next days in the first 5 minutes of the next day's open.
All right, Jim.
Facebook, a company makes a lot of money, and we're coming into the end of the fourth quarter here. I'm sure they're making a lot of money as we speak. And my view on it would be your 200-day moving average is 159, 160. So that would be my line in the sand. And the closer you can buy it to that 159, 160, the better. But if you look out till Q1 or Q2, if we're on the bicycle, pedaling along with us. So definitely a great company, definitely a great big money maker, definitely a great trend. Was overbought up in the in the higher area that it hit 185, and now it's pulled back to fill in some of that juice. And the 160 area, 159 is my line in the sand. But this is a good company, and obviously being long it has been the way to go.
Yeah, definitely for this year. Definitely. All right, Jody, with your multi-time frame correlation, what do you think here?
Yeah, I like Facebook. I like it. Do I think we can come down a little bit more? It would be great if we could, maybe down to Todd's stop loss level so that we could buy it there. I'm only kidding, Todd.
I actually agree with you. If we were to move even lower, I absolutely agree. I would. No, I totally agree with you.
You know, I would love for us to see it coming down to this 167, 168 area. It's confirmed on both the weekly and the daily. If we don't, and this thing turns around, then my confirmation would be when price turns around on the smaller time frames. But right now we are in a downtrend on the smaller time frames, the 5, the 15, and the 1 hour. So I would track it very carefully and just follow this move down until I see a turnaround, divergence at the lows. Maybe that would take us down to the 67, 68 buy area. And then, of course, I would look for a confirmed turnaround there to buy. But I think we could squeeze a little bit more out of this on the downside.
Well, I'm with you on the downside, Jody. I'm not quite ready to pull the trigger yet. But if we put in a new low below today's low, I'm short Facebook. And if you look, it's broken down through the Ichimoku cloud. That is the first time this year. It's found support at the cloud and then, continued the uptrend. It broke down through it. And for me, that has real meaning. I think this, 160, call it, at the 200 SMA is an important support level. But if we put in a new low below today's low, I'm short down to here. And that might be a good, short term, meaning a week or two, short play here on Facebook. And then it may be along again after that. But I kind of like short Facebook if it puts in a new low anytime soon. If it could reverse off there and continue up. So I would want to see a new low before I got too excited. And even if it found support, I think it was Todd talking about support down here at 160. That's a $10 trade, right? That's not bad, right? Buying a put, making $10 on it, I'll book that and call it good. So I like that short if we can put in a new low. All right, next up, Micron, silicon company. Like most technology companies, most of the year had an incredible run up. Let's just go back through the batting order. Todd, Micron Technology.
All right, Micron. I definitely like this, but I would like this if we were, again, today was an inside bar, right? Lower high than Monday's high, and the low is higher than Monday's low. If we were to not a gap, okay, that would void out this trade setup. I would need to see the market open up within today's range, even lower, it doesn't matter. As long as we traded up through the 42.05 by a minimum of 10 cents, I would look to get long. And if we were to open up higher than that, I wouldn't be looking to take it long. I need to see it trade up through it. That's where my entry would be. Again, you could do the call options or buy the outright stock. And my initial catastrophic stop loss would be below Monday's low on that trade. And that's how I would, and looking to make at least 2 times what my risk is. And at least take it at break even when we hit 80% of, one times the range of what my risk is. That's how I would trade this.
I like that you keep talking about reward to risk, because that's, I never take a trade that I can't make more than I have a chance of losing, right? And I like, 2 to 1 is kind of a important threshold.
Definitely, well. Very important.
Yeah, we're gonna lose a few trades, so if we can keep the winners big, the losers small, we're doing good.
Exactly, got it.
All right, Jim Kenney, Micron Technology.
Yeah, Dean, I was with you a couple of weeks ago with Andrew, and somebody had put this on the list, and it was up at 50. And I think we all said, God bless you if you owned it, but not for me at 50, that's for sure. We certainly have seen it come off since that meeting a few weeks ago. Huh?
Yep.
And again, this stock in NVIDIA and some other ones, according to what I'm hearing, are going to be damaged by the new tax law because of deductions that these companies were getting, or companies that deal with them were getting, and then it puts their products a little bit on the defensive, and that's why the SOX, the SOXX, and the SMH, ETFs on the semiconductors have gotten whacked, and so that's the problem here, is that the winds of change have blown here a bit, and but it is still uptrending. 50-day average 42, 200-day average 32. They're still inverted, and I'm sure the 200 is still rising. The volume lately has been about 20%, 30% more than the 200-day, so it has been picking up in volume on this drop. And if, in fact, there is a structural change because of the tax laws on these companies and people who deal with them, then this may not be a one-day holiday. So that's why you'd have to be careful with this stock. And, like I say, line in the sand would probably be 32.5 around that 200-day average.
Okay. Jody, you got any thoughts here on Micron Technology?
Yeah, the chart patterns on these charts are exactly the same as Facebook, exactly the same. So we're correcting in both, and some of the other stocks as well. So I see that the correction could take us a little bit lower, just like with Facebook. It's quite possible that we trade down to the 36 level on this. But again, if we see a turnaround on the shorter time frames, because that's the markets to look at for the turnaround, if we begin an uptrend, and right now we're in a downtrend on the 60-minute, the 50-minute, and the 5-minute, as we play out this correction, if those turn around, then I would be keen to look at the bullish scenario again, because long term it's bullish, but we are in, it looks like a healthy correction than before, because we accelerated up and we need to give back some of these gains. So I think maybe a move down a couple bucks or to the 36 level.
All right. I actually like that 36 level as the support. For me, this is different than Facebook, because it hasn't broken down through the Ichimoku cloud, and I think the Ichimoku cloud does a good job of projecting support, and it's projecting it currently right at about that $36 level. So I'd be hesitant to get short, because I think it's going to find support pretty quick and reverse, probably head back up. So for me, again, that's different than Facebook, because it has broken through support and has some room down to the next support level. Yeah, big impressive move. I remember that when we talked about it, Jim, a few weeks ago, and yeah, at that point 2 weeks ago, it was too late to go long, and there wasn't really any clear indication, any technical indication, any case for going short. That came out of the blue, which is the problem. That's why you don't want to go long on these things, because when a long, mature, bullish trend ends, it can end abruptly, like this one did. Right. So no trade for me is the short answer here on MU. Interesting chart, wonderful bullish trend, but where it's going next, probably going to find support and continue back up, but that's not clear yet, so no trade for me. Hey, we're getting through these pretty expeditiously. Next up is Pfizer, PFE.
All right. See my chart?
Yeah.
All right. No trade here. Nothing, obviously. This is garbage to me. There would be no trade set up for tomorrow or the next day. Well, who knows? If we come down maybe to this level, back down to the 200, maybe try to retest these low. I mean, nothing. I mean, if we came back up and retested these highs, possibly something there, but nothing in the middle here. Nothing at all. So I'll keep this short on Pfizer.
Very good. No trade on Pfizer for Todd. Jim, what about you?
Like it's at a double top up there, and it definitely looks like it's on the defensive a little bit. The sector itself has also been on the defensive as well. So jumping into it now, it seems like you're jumping into something that's lost its momentum, and premature, because it doesn't look like it's actually gained its momentum or gained its footing yet. So might be something to look at and test these areas of support and see if it holds. And then maybe see, as they announce more about what this tax thing's all about, and we see the actual sausage that they made down there, then you have a better idea on how some of these companies might be affected by it as well. One last thing here, just let's take a quick look. Yeah, $34 would be about it. So it's very close to turning around. Volume's been kind of light lately too. So it's kind of a meandering thing. That's why Todd's saying not much going on here.
Okay. Not too much excitement on Pfizer yet. Jody, are you excited about Pfizer?
Well, these are the notes that I wrote. You gave us this list about an hour before, so I just looked at my notes. I'll tell you what I wrote down. Probably down to 34 level before up again. Very choppy on the weekly time frame. Not very interested in it. It's exactly what I wrote. But looking at the daily, this is a beautiful Elliott wave pattern. An A down, a corrective 3-wave B up. We're looking for a C wave down. That's why I said the 34 level. And that's where we should find some support. But it just, on the weekly, it's just very choppy. Just not interested. There are better stocks to trade.
I love that comment. There are better stocks to trade. So in my training course, I talk to people about, what I call instant chart pattern recognition. There are great patterns. And you train your eye, you can see them in about 2 seconds on a chart and decide whether it's even worth doing analysis on. And then you get sloppy, garbage, volatile, random movement charts that you should just reject in about half a second. And PFE is a chart that I would want to reject in about half a second. I look at it and I go, nothing there. It is just volatile, random movement. I want no part of it. That's my take on Pfizer. Was there a comment?
I agree with you there 100% on Pfizer.
Yeah. Yeah.
And your whole analysis on within a second, you should know whether or not it's even worth even thinking about. I agree. Instant, what do you call it? Instant, what? That's good.
Instant chart pattern recognition.
Absolutely. Yep. I could go through 100 stocks in 5 minutes and pull out, 5 to 10 that I think would be interested. So that's good. That's good, good, good. We're going to SPY now, right?
Well, we've done 5. We're pretty productive. So let's take a break. And let's, I don't think anybody has been jumping up and down going, there is a home run trade, right?
Right. So
why don't we show ones that we do think, each of us think are great setups rather than being a bunch of downers. Take a moment here and just go through and say, here is a chart. Here's a setup that I think is awesome. And Todd, go ahead and kick that off with you.
Actually, I did a video today, and again, this is here. Let me just show do you see my screen, or did I push that before, or what? What's up? Tesla. Now, again, it's not. I think it's a good trade if it actually triggers tomorrow. You can see my chart, right?
You can have your chart.
You can see my chart.
There you go. Yeah.
Okay, there we go. Now, granted, okay, Tesla. Now, obviously, long term, this is, the trend is up. We've been choppy for quite a while. I understand that, right? We're at the lower end of this range right in here. But again, I love when the market or a particular market, right, contracts, right? Contraction leads to expansion. Expansion leads to contraction, the whole 9 yards. I love when it contracts because it gives you a very low risk entry. So really, Tesla's been very indecisive the last month or so. And so I see this inside vertical bar, right? And I pointed out a couple of those tonight. Granted, I know we're below. These two purple lines are what, the simple 200 and the exponential 200 moving average, right? I use them both, okay? So I know we're below both of them. I know that's bearish for most people. I would say if we're able to break up through today's high tomorrow and trade up through it as opposed to gapping through it, I would be looking to buy call options, a couple strikes out of the money. Again, January 19th expiration, looking for some pop to the upside with very, very low risk on this. So Tesla would be one. And again, that's just off my head that I'm looking for tomorrow. Another one I'm going to bring down here is called DPW. It's called Digital Power. Now, this is somewhat related to the whole Bitcoin cryptocurrency phenomena that we're seeing. And so it was a penny stock just about a week and a half ago. And so I picked up some of this like a week ago at $1.49, and we've made it quite a run. We've doubled it, right? We're up to 428 today, so I'm still long this with a trailing stop up in here. So I don't know, but that's already come and gone already. So, but it is directly related to the whole Bitcoin. So I like that trade this level. Okay, I'll let someone else talk now. I'm rambling.
Okay, short on Tesla is your home run candidate there.
You mean long through
Right. Long Tesla.
through today's high? If we're able to break through it and trade up through it as opposed to gapping up through it, I'd be looking to buy call options, definitely.
Okay, Jim, what do you?
Well,
What do you
I'm normally talking about strategies and, things like collars when, a Micron technology is up at 60, collar it, or Facebook hits, or Netflix hits 200 or something, collar it. But a couple of markets that might be interesting that are, might have to do in some of the commodity sector. One is Mosaic and Freeport-McMoRan FCX. They're not really, running crazy. They are turned up a little bit in my view. If 60, like you were talking about, if that happened, that would be pretty exciting. That might take, the gold through 1,300, might take the soybeans and stuff through 10 or 11. Those things have been dead for a long time. They're range bound for a long time. If they get on their bicycle, they could have a few people wanting to pedal. So going to be exciting or just a dead dog, but I do know that they are not way overbought, and I do know that their day has not come. So that would be something interesting to investigate.
All right. Jody, I can't wait to hear what you're looking at. What do you like right now?
You know what? I've just been looking at cryptocurrencies for the last little while. So even though today I had a coaching client, we did talk about a few of the stocks, but I just want to talk about cryptos. I don't know. I have the crypto bug. This is our scanner. And I think, like, obviously Bitcoin is through the moon, but I think that when this contract starts trading on the CME, so when there's a futures contract, I think it will provide more liquidity and allow for some hedging. So I'm really looking for some kind of a pullback. I know we've accelerated, and you can see by our scanner that we're blue across the board because everybody's buying Bitcoin right now. But there are other opportunities in some of the other cryptocurrencies here. Our scanner is a really good indicator. At one point, the whole block was blue. So when these turn, like, I have alerts set that when these turn blue again, I'll take a look at these other cryptos to see if they're, worth getting in. But I'm waiting for, I think Bitcoin is stealing the show right now. If we look at the charts, this is Bitcoin. I mean, look, you can't touch it, but I do think it's going to go much higher, right? So I'm not looking for too much of a pullback, but something, maybe 10,000. And I think we're going to get that later on in December after the contract goes live and some hedging comes in onto the exchange. I just think there will be some profit taking on that, short-lived profit taking on the CME or the CBOE. And I'm waiting to add at that point, and not add here, but add at that point.
All right. Wait for the pullback and then add to crypto.
Yep. Yeah.
Okay. Well, I got a stock that I like here, and I like it to the downside. This is Electronic Arts. I'm a Elliott Wave person. I try to use a very simple, very repeatable form of Elliott Wave. I only try to trade 3 different setups. So you can see there was a big run up in EA. This is wave 3, big move. And we're looking to trade it down into a Fibonacci retracement. I got a price target here on this at $90, kind of in the middle of these 2 blue lines is a Fibonacci retracement zone for wave 4. right? We got short on this at 105. It's heading down. It's broken down through the Ichimoku cloud, broken down through the 200, right? Putting in new lows. And I think we're in good shape. We got to stop on this at 113.91. We're going to trail it to this previous high here pretty quick. I think EA is a nice short down to 90 bucks, maybe even lower, right? And that trend is gaining momentum. You can see here in the price oscillator. This is on, man, and there's still a reasonable amount of reward to risk on this trade. If you're, entry at today's close up here, the ratio of the stop to here, stop to the entry versus the entry to the target, still pretty good reward to risk. And again, we're going to trail our stop on this thing down to this previous high. So I like Electronic Arts to the short side. I think that one's going to continue dropping. I'm a technical trader, not a fundamental trader, but I was really encouraged when I started looking at this chart, and I got a 19-year-old son and all his gaming buddies, and I noticed on Facebook and social media they were all very upset at EA for some reason over their latest game, and so that just gave me a nice warm fuzzy feeling as well. Don't know the deal there. I'm not a gamer, but pretty happy that I found a short technical setup, and the serious gamers were bashing the company at the same time, so that's really good news for me. And I see it looks like Todd's doing a little quick analysis on that as well. I don't know. What do you think, Todd? Do you like the short there on EA?
Absolutely. I think that'd be. I think that looks like a good trade. It'd be very hard for me to sell it right here. Actually, I would, if we were to get a day or two with higher highs and higher lows up into between 106 and 108. I just, it's really hard for me to buy it down in here or sell it right down in here. I mean, you sold it up at 105. I mean, that's beautiful, right? So you're short where?
105, yeah.
105, yep. I think that, I think the reward, the risk is good. I mean, if you're looking for 90, you're looking for about 15 bucks, right? And you're risking about 8.5. That's a great reward, risk to reward starting off a trade. I mean, that was your reward to risk when you first put it on.
Yep.
That's a good trade. That's a good trade setup. But I would definitely like to see either a retest of today or even yesterday before putting on maybe some puts. Are you actually short the stock or bought some puts?
Bought the puts. Deep in the money, high delta puts, baby.
Deep in the money. Okay. Expert. What? January, February?
We're out. Let me see. I'm in trades typically about 45 to 60 days.
Okay.
So I don't buy anything inside of 90.
Okay.
Right. I try and get them out. On EA, we're out. Yeah, we're in the March 120s.
That makes sense. No, it looks like a good trade though. Actually, I'm going to be looking to probably put something on tomorrow if we were to get some type of little rally going on an intraday basis. Yeah, I would. Yeah, see where the 200 simple and exponential crossing one another right now. We're at about 107-ish area. Plus, you see the gray and the blue, what I call action zones, which would be support on my chart, or resistance rather. So yeah, definitely 107-ish. That looks like a good setup actually. So thank you for that.
Yeah, you bet.
Definitely.
All right. So we'll get back to the list from the registrants, and we're going to go to the S&P 500. Take a look at the SPY. All
right. Can you see my chart still?
Yeah, you're good.
All right, good. The SPY actually yesterday, about 265.5, I bought the puts. So I'm short the market right now. I think January 19th, 266. January 19th expiration, 266 strike, I believe. Or did I forget. So, yeah, so I'm kind of short, but I'm very nimble on this. Obviously, the market's really, really strong. And so don't want to get my head cut off. So at this point, I'm up probably a little over $1 on my puts. So I'm watching it closely. If we start penetrating through today's high to the upside tomorrow, then I would be looking to probably go to break even or something like that. So again, very, very nimble on this, right? I mean, shorting a market that's screaming to the upside is kind of ridiculous. So taking a stab at it right in here. So that's what I'm doing here with SPY.
Well, there have been so many bear traps on the SPY, right? Just when you think it's getting ready.
Yeah.
One of these days.
Exactly.
One of these
days,
man.
Right. Exactly. I mean, on an intraday basis, I mean, look at what the first, which was what, Thursday or Friday. You thought the world was going to come apart on that day, but then it completely reversed and closed near the high of the day. It's, you know, in your face as you think things are coming apart. So yeah, you got to be very careful.
Yeah. I'm watching it. You know, when it does finally correct, it's going to be big, right?
Definitely.
It's going to be big. There's going to be a lot of money to be made for those who are ready for it. But meanwhile, you know, it's a bullish trend, undeniable. That's the reality. It's still heading up, right?
Definitely.
Still putting in new highs, even in the last few days. So we got to exist in reality. What's the reality for SPY for you, Jim?
Well, just you got to figure out if this, when they start looking at the tax bill through all the reality of it, and if they can get a resolution on it, and Fed hikes on the 13th, you got to say to yourself, you've created a line in the sand this week with a big, you know, that looked a little bit blow off in the Russell, in the Dow Transports, in the NASDAQ, and also in the S&P. So you got your lines in the sand this week. I think basically by the end of next week, if we're not taking out this week's high, then you could actually maybe start doing something, looking for a pullback, because we're, you know, 245 or 2450 is the 200-day on the S&P, and so, you know, we're good 200 points over it, and that's a pretty good amount, and even about 100 points over the 50-day. So pullback, if they are disappointed with what they got down there last weekend, it could be enough to give this thing
back to the mean at some point, right? Some point you would think.
But, you know, but you have to have some kind of a something to hold your hat on. And so, like right now, you've only had a couple of 48 hours or something, you know, where this high has been established. That's not a whole lot of water under the bridge.
That's right. Exactly.
It did have a feeling. It did have a feeling of a blow off of a short-term nature. By hitting it up there, Todd, I don't think it was certainly unwise at all, and certainly on the futures, they've come off pretty darn good. So, you know, obviously it does feel right now that we had a blow-off high earlier this week. Only time will tell, but, you know, right now it does have that feeling it could be that.
Right, exactly.
Party of one. I just announced about, what, 4 or 5 indexes that look the same.
Exactly.
Yeah. So, I mean, it's not like it's the S&P and everything else is making new highs. That's not the case at all.
Right.
Banking stocks, you know, we went up to 255 on Goldman, and now we're at 248. Interest rates can't stay up for more than about an hour. Yields went to 240, and they closed at 235. So, you know, if we're going to have huge growth, huge activity, huge, certainly the bond market doesn't believe it.
So, Jody, I like your multiple time frame, your kind of cascading time frame analysis there. What are you seeing on the short term? Is there any sign of weakness coming up?
Yeah, so I wrote my little notes. I just took one sentence. Could have a correction down to 260. It's still, obviously we're bullish, but I could see 260, maybe 261. And if we break below 260, then 250. So I would, yeah, that's what I see. That's what the charts are telling me. 260 is the next major support. And if we break that, then 250.
And that's about the low that was hit when we went down the other day, right? That 260 area when we had that.
Yep, blow off bar, definitely.
Flynn shock or something.
The Flynn shock. That's cool. Yeah, I love the terms that you hear that people come up with in the media. I mean, last week it was Rexit. Have you heard that term? Rexit. When the rumor was that Rex Tillerson was going to be out. Yeah. Funny. I love the creative minds in the media. So I'm showing the SPY 60-minute chart here, and clearly we're in an uptrend. We have been forever.
Yeah.
But boy, just the slightest bit of news, and it kind of wants to drop. Now we're still above the Ichimoku cloud, but I think if we go below it here at about 262, I like Jody's support level at about 260. That's where the 200 is. If we blow down through that, all bets are off, right? I think there's a chance. I love all these market cycle theories, like the Santa Claus rally and the January effect and year-end selling and window dressing and faces of the moon and whatever. I don't care if there was a Santa Claus rally 7 out of 10 times. What I care about is the reality of price movement.
Right.
And I think the Grinch may actually steal the Santa Claus rally this year if there's any other, kind of homily, and that is, buy on the rumor, sell on the fact, right? The markets run up based on expectation about the tax bill, right? Once it's done and real, it'd be like, okay, we got it. Now there's some disappointment, but that's all emotional, speculation. I trade the reality of price movement, but I think the reality is we've run up for over 8 years in the market, and it's highly valued. And when the correction begins, it's going to have some velocity, and we don't know what the precipitating event for that will be, but there will be one. And so, and it's a short-term pullback. We get down below 262, we could be taking it down to 260. If it goes below 260, we could have a bigger thing on our hands here too. I am not going long at these levels. It's just too mature a trend. So I'll look for pullbacks, take some short-term ones. If it gets bigger, I'll stay with it. That's where I'm at on the SPY. It's my story, and I'm sticking to it. UTX, United Technologies.
Yeah, I can keep this one short. This is nothing for me. Absolutely nothing. Yep, I see nothing. We're in a range. Nothing excites me even remotely close to where we're at. We have to rally a bit to test these highs or come back down. I'm going to keep it short. So if you can see my screen, there's nothing here for me.
I mean, you got a company that makes something as cool as the Black Hawk helicopter, and they sell that segment. Who wants to trade a company like that?
Right. Well, yeah, right. And price action tells me that there's nothing interesting. It's all about probabilities, trying to stack those probabilities in your favor, and then you try to stack the reward to risk, try to find a trade, and this has none of it.
Yeah, I'm with you. Totally with you. It's a pretty sloppy chart right now for me.
Very, very sloppy.
It looks like Pfizer a little bit.
Exactly.
It looks like Pfizer just going back and forth. All these defense stocks, Raytheon, Boeing, these guys here, they've gone through the roof, and they've gone and gone and gone and gone and gone. And maybe there is a point where they have to a little bit, and we might be at that point now.
Yeah. Jody, don't want to leave you out
unless we get another missile. Unless we get another missile, then of course you got to get back on the train, right?
Yeah, we go ripple off a couple hundred Tomahawks, then there's a little bit of supply chain pull. Who knows, right?
Dean, you want to hear another phrase?
Yeah, I mean, it's not very interesting for me either, quite frankly. We are, but from an Elliott wave perspective, we are forming a base on the lower time frames, a base for a possible move higher, a possible pop higher, as long as we hold the 119, 120 area. I suppose we could retest the 124, maybe go to 125, but I'm not excited about it. I'm just telling you what I see on my charts.
Yeah, absolutely. And one of the things, it sounds like we're all kind of in agreement, and Todd has chimed in on this. When I'm teaching students, one of the first things I try to get the point across is, the question when you look at a chart is not how do I trade this, whether it's Apple or UTX or Facebook. It's not how do I trade Facebook. The question is, should I?
Right. Totally.
Right. If there's not a good pattern, not a good setup, we don't have an edge, we don't have probability on our side, we don't have a good reward to risk ratio, man, go find a better chart.
Right. There's plenty of them to look at.
Thousands.
Exactly. Yep.
Right. There's always good ones out there.
Totally.
We were talking about the run up in defense stocks. I had to bring up Caterpillar. I got that showing. That's certainly not a defense stock, but man, that's nuts. It's just crazy. One of these days, right? One of these days. That wasn't on the list. Next up is the Russell. I think we're going to be in the same place in our Russell discussion that we are in the SPY discussion here.
Right.
But you guys see anything different on Russell versus SPY? Any early? You know, the Russell can, you know, again, one of these theories, lead the market down, right? First the Russell, then the NASDAQ, then the S&P, then the Dow. I don't know. What do you guys think about Russell?
I agree with you. Same analysis I had on this SPY. I mean, same thing. I won't want to initiate a new trade up in here, not unless, not unless we were to come back up and try to retest those highs for potential short. But again, yeah, this is crazy levels, right? Love to see the market come down to, let's say, I don't know, 144-ish. Test that pivot low, the low put in place on November 15th. The 144.50 level, right? So we're up in no man's land right up in here. So in order, to put anything on, the lowest risk trade you would have would be initiating a put trade if the market were to rally up to like 154-ish area, you know? But that'd be completely counter trending against the strong trend we're in. So, but other than that,
Right.
that's how I feel.
Okay.
Biggest
Jim?
value to the Russell, the biggest value to me for the Russell and the transports is that they were the two that were going nuts because of the tax reform was going to get passed. The fact that we've lost about 300 points off the high on the transports and 40 points off this Russell in such a short period is kind of telling me right this second that they don't like what came out. And so next week and the week after, can't get on his bicycle, and if for whatever reason it starts to deteriorate further, it could be giving us more indication of what the overall markets might be doing. And this Trump was going to deliver may not be diamonds, it could be coal if the thing starts rolling over.
Yeah, wouldn't you like to be a fly on the wall in the reconciliation discussions, right? All the trade-offs being made.
Well, if you're going to make a permanent decision on taxes, it seems silly to have to do it by December 18th. You know what I mean?
Right.
Russell for Jody, what do you think?
I like Todd's level of 144, 145. That's what I had in my notes.
Mm-hmm.
So if that's what I see as the next support, and then we have to take it from there.
Yeah, and I agree with those levels. That's right at the bottom of the cloud. That's where I think we would find support if we pulled back. So I'm in agreement with you guys on that one. You're calling in from Ontario, right, Jody?
Yeah.
Is that what you said?
Toronto.
Toronto.
Yes,
Toronto.
It is in Ontario. That's correct.
Okay, I was right in a broad sense, right?
Yeah, you were right. But I could be in Ottawa. I just thought I'd say I'm in Toronto.
Is it cold up there yet? Is winter?
Not really. It's not really cold yet. We've had a few cold days. I'm not looking forward to it, but I'm going down to Florida for a couple of weeks soon. So
There you go.
Yeah.
There you go. I went to Edmonton for Christmas one time. That was cold. That was really cold.
Yes, that is cold.
All right, one last stock before we wrap it up here. Let's go ahead and take a look at Apple. Can't do a webinar without talking about Apple, right?
All right. Apple is, I wouldn't be looking to do anything up in here. I would definitely like to see the market sell off a bit here, break down through this pivot low, trade somewhere in here, possibly a bit lower even. I mean, obviously I'd love to see it come in more of a pullback, but I wouldn't be looking to do it. I wouldn't be looking to initiate a trade long here. Wouldn't be looking to go short in here. I wouldn't be looking to do any of that in here. I would definitely want to see the market at least penetrate down through the November 29th low and trade somewhere in here by what you see in here, the gray shaded area in here. And then I'd be looking for some type of price pattern to the upside, either what I call a bullish outside vertical bar, right? The opposite of an inside pattern. So inside is lower high, higher low than the prior day, right? Or an outside is the opposite. You take out the high of the prior day's high, the low takes out the prior day's low, and you have to close in the top quarter. So I'd like to see some type of price pattern somewhere in here to potentially initiate a long trade. But that's it. Up in here right now, nothing.
Okay, nothing. Jim, you got something?
Yeah, well, I think Todd was talking about a pullback, and that's probably not a terrible idea. If we can go down to 150, 160, that's where the 200 and the 50 days located. And other than that, if we were to close above 175, that might be telling you that we're not going down and that the bicycle's turned up. Their earnings are supposed to be very good in this fourth quarter. And so this is a company, obviously, people have made money on the long side. So like Julian Robertson said about Netflix, bad-mouthing Netflix is like bad-mouthing Santa Claus. I think bad-mouthing Apple sounds a lot like it still. So I would say above 175, it could be getting back in the ball game, and down towards 160, 150, you'd probably be getting a bargain.
All right. And Jody.
I agree with that analysis. That's exactly what my charts are saying. We're at a support right now. So for us to break and see that 160 level, 160, 150 level, we've got to break all of these current lows. And then the next stop will be 155, 160.
Okay. I wouldn't mind taking it down to 155 or 160 from here. That wouldn't be bad.
That'd be great.
But I see some significant support that might stop that. You know, we do have over the last through November to now, we got a little small series of lower lows, lower highs, lower lows, which can indicate a trend change, but it's got to break down through some support before that really happens. So, you know, I'm not crazy about a long. It's too early for a short, so I'm not in Apple at this time. Don't like it as a trade right now. I think there's better, higher probability trades out there for me. Well, hey, that's it. We're up here just over 7 o'clock on the West Coast, over 10 o'clock on the East Coast. People are starting to yawn. Got to get to bed. Get up and catch the open.
Sounds great.
What's that?
Sounds great. Thanks for having me, guys and girls. Everything's been great.
Yeah, it was nice to meet you, Todd. It was nice to meet you, Jody, to hear your inputs. And Jim, good to be back here with you. And
Sure.
I think we're going to go ahead and wrap it up and take it back to you, David, to shut us down.
Oh, does anyone want to do a quick closing statement about your site or any kind of special offer or anything you want to share with the audience?
Oh, yeah, there's that, huh? Don't want to forget that. Yeah, so one more time around, if, start with you, Todd, any just closing thoughts, and if you wanted to, share a link or something.
You know what? I don't have really anything on. No, I don't have anything right here right now, so I didn't come prepared for that. So you can go ahead and do your. Hey, I like that. I like that landing page there, man. That looks nice. I like that.
Oh, thank you. Yeah, thank you.
Good. But yeah,
Jim, closing thoughts for you.
Yeah, just closing thoughts, as I always have, is, the higher and higher and higher the market gets, it doesn't become less risky. So learning strategies like collars and married puts is probably not the worst thing to know about. And Option Professor has DVDs targeting exactly that. So that could put parameters around your equity so you don't wake up one morning and find out that it's not quite what it was. And optionprofessor@gmail.com, you can shoot an email over and get some more information.
Okay, super. Jody, closing thoughts and a link or anything you want to share?
Yeah, I'm showing we just have a launch. I spent the last 3 months researching to put together a great course on the blockchain and cryptocurrencies, because all of my clients were asking me. So here it is. It's $99 and it's really pretty thorough. So I would suggest putting a little bit of your assets into this space, because I just think it's going to grow much bigger. ElliottWaveUltimate.com/crypto is this landing page. You give your name and email, you get the first video for free. And if you want to pay $99, you get a great course, and you can, dip your toe and start looking at this. And yeah, I mean, that's okay. And then if you're interested in daily analysis on 15 minutes, go to fxtradersedge.com/festival. And I think there's a special there for $17 for a month of analysis plus a course. But this is what we are. I just put this out this week, this course, this blockchain and cryptocurrency course.
Okay, excellent. I know that's everybody's asking about it. And so I'm Dean Jenkins, followmetrades.com. That's my website, followmetrades.com. My main thing is a stock advisory service. I've got my multi-year track record posted here. It's verified. You can look at the details of every year here, every single trade. I believe in complete transparency, and it's verified. We have external CPA firm auditing my results. And if you want to just put your toe in the water, find out more, there's a free newsletter I publish every week, market analysis. Call it Beyond the Noise. You can sign up there and check it out. That is what I'm about. And now, David.
All right. Yeah, thanks everyone. For everyone watching, be sure to hit the YouTube subscribe button to get updates on future shows. Also, be sure to join us next week for Crowd Forecast News on Monday at 1 p.m. Eastern Time, and the next episode of this show, Analyze Your Trade, on Tuesdays at 9 p.m. Eastern Time. We got a good lineup for CFN for next week. 2 first-time guests, Rob Booker and Hema Reddy, and also Christian Fromhertz and Mike Pisani will be on, and Dean will be back to moderate that one as well. So just want to thank all my guests again for this week. Todd Mitchell of TradingConceptsinc.com, Jim Kenney of OptionProfessor.com, Jody Samuels of FXTradersEdge.com, and Dean Jenkins of FollowMeTrades.com. Thanks, everyone.
Thanks. Bye.